With Powell set to testify again up on Capitol Hill, futures are reversing early losses, going back into positive territory. Can they keep it up all day? That's coming up on 3 Minutes on Markets and Money. Jerome Powell set to testify for a second day up on Capitol Hill. Yesterday kind of roiled markets a bit. Markets had an early rally, wound up giving it up late in the afternoon as basically Jerome Powell said, look, might have to actually create a recession in order to contain inflation. That continues for now to be their main priority, which is to combat those inflationary pressures. This morning, futures are pointing higher. We've talked about recently markets being very oversold here, trying to form a little bit of a bottom here, trying to get a position set up for a rally. Markets are oversold enough to now contribute to that rally on a short-term basis. But as we have noted repeatedly, these rallies are to be sold into. As we keep watching what's going on in markets, selling pressure continues to show up on these rallies because there's so many individuals trapped in these sell-offs that they're just looking for an exit. Each one of these rallies continues to be that opportunity for that selling to occur. What we're looking for here is for the markets to rally back towards the 20-day and the 50-day moving average. That's somewhere right now between 3950 and 4,000 on the S&P 500. That will likely take the short-term oversold indicators back to overbought. That will give you a good indication when it's time to take some money off the table, reduce your risk, add hedges if you want at this point. Now, at some point down the road, we are going to see this market continue to rally and break out of this downtrend that we've been in. That's likely not just yet. Markets are still trying to price in, of course, what's going on economically. They have not priced in a recession, and more importantly, they have not priced in the decline in earnings estimates that has to occur here, particularly as the economy slows. Estimates going into 2023 have barely come down at this point. Those have much further to fall. And as we see estimates start to return to trend, particularly on the more defensive side of the scale on consumer cyclicals, that's going to see a bigger contraction. Prices have to decline here some more as we begin to adjust for lower earnings. And again, as we've talked about forward PEs on stocks, right? Forward PEs have come down to around 15 times earnings. That's not necessarily cheap because, again, in this environment, in the valuation ratio, price to earnings ratio, we've seen the P come down as asset prices are down about 21% for the year so far. The earnings have not come down yet, so the E still has to come down. If prices remain the same where they are right now and earnings decline as expected, valuations are going to go up. So prices have to come down some more as earnings come down, as we see slower economic growth. So again, that's why we have not priced in just yet that type of recessionary environment in the economy. One last thing is that yields also have not begun to price in a recession just yet either. Again, as we take a look at 10-year Treasury yields, they have been coming down here over the last couple of days. Yesterday, having a fairly sharp decline as Jerome Powell talked about the risk of a recession. The reason is that as economic growth slows, inflation comes down, yields will fall also. We're very close to triggering a buy signal on interest rates, which is buy signals, sell signals work the inverse on interest rates because they're the opposite of bond prices. Interest rates here scheduled to fall here. If we do trigger these two buy signals for interest rates, we could see interest rates fall to about 2.5%, all the way down to 2% potentially on the 10-year Treasury yield. And that could happen in fairly short order. Now, that would align with what would be going on as yields begin to price in the potential for a recession. We haven't seen that just yet, but that will come as we get later on this year. That's 3 Minutes on Markets and Money. I'm your host, Lance Roberts. See you here next time.